Hi everyone, James Trano here from Senné with Cassie Dealy, my associate, and we're privileged to have Fred Allard with Movement Mortgage here to talk about what's happening in the industry that's going to help us work with our clients and for you, people listening, to understand what is available for mortgage products and to help you get into a home.
Well, as you know, James, the Fed met on Wednesday of this week, and they kept rates unchanged. But in the meeting after that, they signaled that potentially 2 more rate increases by the end of the year. What that kind of led to in the marketplace is a lot of the different bank economists having a different point of view on what that means. Okay. And what it could mean is, unfortunately, it could mean interest rates stay higher for longer. Mm-hmm. One of the new terms. Into 24, we were initially hoping for some long-term interest rate relief. In early 24, that could be delayed a bit, although we do expect to see some interest rate reduction over the course of 2024.
Right. So what we've been communicating with clients and what we've had our associates been communicating is, buy now. Still get involved now because interest rates may go up a little higher. They may come back down. In the long term, they can always reassess their interest rates with their mortgage provider, mm-hmm. and get a rate adjustment, maybe 2-3 years down the road. That's still the thought process?
Without question. There's one way to look at different loan options currently to offset the true cost of financing right now. So inventory is still a real issue in the industry, especially in Massachusetts. What that means is prices have, as you guys can confirm, yeah. They've maintained the same, if not increased a bit, despite what rates are. With that, buying now makes sense. You will restructure your loan down the road. You will save money on your current mortgage down the road. Having done this for 23 years, I've been through, while this is probably the worst cycle I've seen, we've been through these kind of upticks in rates that have always corrected in time.
So that being said, if you're a buyer looking to buy, you still have options.
Without question. Yeah, popular program now, and as we talk about higher rates for longer is one of the terms in the industry that's been thrown around. The 2-1 buy down is, or even the pre-2-1 buy down, or a 1-0 buy down. And in essence, what that means is you're able to buy down the rate so by a certain percentage each year for a certain period of time, improving your monthly payment over the course of that year. So quick example is, you have a 7.5 30-year fixed rate today. With a 2-1 buy down, you could buy that rate down to 5.5% for the first year, 6.5% for the second year, and then kick in your full actual rate of 7.5 from year 3 and on.
But hopefully by then, maybe interest rates have adjusted themselves, and then you change out your mortgage.
Correct. The big part to that is, how does that buy down work? Well, in essence, we take the difference of those funds and we calculate that into what those difference in payments. We calculate that into what that cost is on a yearly basis, and we can either pay for it ourselves from the buyer standpoint, or we can ask for it as a credit from the seller towards your closing costs. Now, on that scenario, on a $650,000 loan, you're looking at roughly $15,000 in payment cost to make those payment savings work. So significant monthly savings.
And it sounds more complicated than it actually is.
Without question. And I'm not the best at explaining it in this format, but I certainly can explain it one-on-one for sure.
And essentially, when you're buying it, and even if you're getting it at 7.25%, 7.5%, and you're making an initial purchase, and you don't use that type of program, your purchase is based upon what you can afford on a monthly basis.
Yes.
So even if you didn't have that program, you can afford it at the 7.25%. That's what your purchase price would be. That will be what your monthly payments will be. Using this program, you're saving that money in the first 2 to 3 years, and then hopefully maybe you can change out of that vehicle to something else, and then your payment still stays lower.
Correct.
So no matter what you do, your purchase, your mortgage is going to be in line with your income and what you can afford to do.
Correct. You're buying at today's at today's
lower prices.
than they will be
Right.
down the road.
With the understanding that when interest rates do go lower, in every scenario, prices tend to go up a little bit more in the value of what you're going to purchase. The home prices will increase over time as interest rates decrease. So right now, it gives you, it's just making a decision. Do you want to be a homeowner now? Or you want to wait?
Correct.
And then have to be in competition or in more competition with people down the road.
And we can all appreciate where rates are at now and how that can derail your home buying process or your timeline. I can certainly appreciate that. You know, in the heat of the moment when the market really changed, we had people we were working with were going from 3% to 6%. At that time, you know, that's a big difference, and it's a lot to overcome mentally. But when you look at the grand scheme of things, you know, home ownership is still the number one goal of most Americans.
Right.
It's a long-term investment.
It's a long-term investment that will pay you back.
Mm-hmm.
You know, keeping an open mind to what rates are today and how you can look at it long-term versus just the immediate short-term is what I recommend. You know, for any first-time home buyer, it is more than likely not your last home purchase. You know, again, looking at the grand scheme, the long-term goals for yourself and your family, seeing the investment today as an investment and not as an expense,
Right.
it is an important mindset to have.
Well, we recommend that you speak to mortgage professionals, just like Frank, because they know the programs that are on offer by the state, programs that their companies promote.
One example of what other what programs are available. We could talk all day on different loan products that you know, are good for our clients, and you know, everybody's situation is different. So with a conversation, where we can quickly kind of determine, you know, this might be a good fit for you. What's your risk aversion, and you know, and take that approach based on what their needs are, what their wants are, and ultimately we put each client into the right fit for them and their family.
Again, a home seller who's looking to downsize and maybe move into, you know, a smaller home and maybe going into a condo or a townhouse or a 55-plus community. Mm-hmm. That's a challenge I think a lot of home sellers are having. They're not sure what they can do to move forward. I think Movement Mortgage may have some products.
Yes, I mean, depending on your age, if you're over 62, you know, we have a very good reverse mortgage department.
Okay.
That's something that a lot of people are leaning towards these days, where it allows them to, you know, if they're in a fixed income in a home that they don't owe much on, right. But it may be too big, or they want to get closer to their kids in different parts of the country, whatever the case may be. Mm-hmm. Utilizing reverse to buy a home after selling that home is an avenue people take, because it allows for the home buyer to not have to have a mortgage payment.
Okay.
So again, that's one way of looking at it.
And if I would assume too, I mean, like living in Massachusetts is an expensive state. Homes are expensive too. So
real estate taxes.
Yes,
right. I mean, there's a chance that these people the people that own these homes are moving out of state, so that it does put them in a better financial position if they're moving to a state where the homes are at a lower cost. You're taking the reverse mortgage to buy that location, not have to have a mortgage, and then when they sell their home, they may actually have enough equity in their home to still walk away with something.
Without question, yes.
So
without question, and that's what, you know, in the course of those consultations, you kind of weigh it all out. You know, what you're going to end up with cash on hand, and how to best utilize that money to buy, and more than likely hold on to some funds,
right,
as well as have, you know, either a small mortgage or something like a reverse on their primary.
So you need to speak with your financial advisor, your mortgage professional, and understand what is available to you in order to make those changes.
Or you know, in most cases, I can tell you that with a first-time home buyer that I come across on a daily basis, in most cases they're a year away, or maybe two. You know, and it's never too early to have that conversation with a loan officer to really kind of put in place what your plan's going to be. Whether it's to save more money, whether it's to clean up some credit issues, whether it's to
not buy that new car.
whether you by making an investment of that nature, things of that nature. And then those are all things that we do in our initial consultation with somebody. That might be a year to 2 year process before they actually find the right home. No question.
In many cases, making a decision just starts with a small conversation, getting an understanding about what your expectations are, and what your plans are for maybe not even today. It might be 1, 3, 5 years down the road, but you need to have those conversations in order to plan ahead.
But I would just say don't put it off. It's a cost-free consultation to kind of just put in place a game plan for your future. Doesn't have to be something you're doing tomorrow. It can be down the road as long as you need it.
So no obligation on the conversations.
No obligation.
All right. So I'm James Trano with Senné.
I'm Cassie Dealy with Senné.
Fred Allard with Movement Mortgage.
And we look forward to providing you with more information down the road. We'll check back in with Fred every once in a while and see what's going on in the market. Keep you informed about what's going on in the marketplace. Be on the lookout for sales activity reports. Cassie and I post them on Instagram, on Facebook, and I think Patch at this moment.
And LinkedIn.
And LinkedIn as well. We want to keep everyone involved in what's going on in your neighborhood.
Feel free to reach out to any one of us with any questions.
All right.
Thanks, Fred.
Thanks, guys.
Thank you all. Thank you.
Bye-bye.
Bye.